Okay, Saturday, the 20th of July, 2024, and we're having a look at the weekly time frame, and we're going to get straight into it. As you can currently see, this is the candle body for the week that has closed out. We've poached into sell side liquidity and a previous PD array, which is at 4.197. It represents this order block, which is the three down closed candles before we saw a break in a shift in market structure to the upside, because this is the overall trend down. The trend is down. So what we've got is a shift in market structure of this candle body here. We've got buy side imbalance, sell side inefficiency, which was met with this candle there. But then we failed to reach and breach 4.741, consequent encroachment of the higher time frame upper displacement fair value gap. Therefore, we dropped lower. Now, last week when I done the analysis, I was saying that there's a good chance that we could sell off even further into this fair value gap. But before we get there, we do have another form of sell side liquidity, which would be at this region here. So it would be at 4.038. What this candle has confirmed is stops to the downside has been taken. We've also managed to close bullish 50% of the prior weekly candle. So what this could potentially mean is we could see a run to the upside, taking out the prior week's high, which is at 4.327. These two up close candles before shifting market structure, you could argue and say that we have traded to the we haven't traded to the open, so we have further upside to go if we were to do so. But I believe that if we were to trade up there, then there's a good chance that we're going to run out buy stops, because sell stops is taken for the week. Every single week we've seen buy stops, week after sell stops. This week that has closed, sell stops. Now, is the week that's going to open to sell stops out? I mean, it does look bearish, right? So, I mean, the sentiment is to the downside, but that would be the very reason why we would have a short-term relief rally to the upside, reaching 4.327, and then potentially getting up to the consequent encroachment of the highs to the lows. So the dealing range high to low, right? So this is having a look at the weekly time frame. So let's have a look at the daily time frame. So we opened Monday, but from Friday going into Monday, we have a new week opening gap. We traded through it on the Tuesday, back into it on the Friday. We closed above it, 4.249, 4.249. We have not even relative equal highs. We have a double top to the tick at the highs for this week. So we created a gap to the downside, took stops, and now we've closed price relatively close to where we printed highs for this week. So I do believe that with this fair value gap that has been negated, I do believe we could come back up and run into this region here. We do have another SIBI right there. So we have a buy side imbalance, sell side inefficiency, and we have a sell side imbalance, buy side inefficiency on both ends of the spectrum, and the consequent encroachment of that. We've still yet to meet that. We've got the last up close candle before a continuation to the downside. We're yet to meet that. I do believe that it's a bit neat. I do believe that if we were to reach up into this region, 4.327, which is the weekly highs, 4.327 I mentioned on a weekly time frame is where we'll be looking to attack. But taking things one step at a time, I do believe that this area is the next form, or should I say 4.249 is the next draw on liquidity. I'm just gonna make a I don't really want to, I'll be honest with you guys. I don't really want to make this trend line. It just looks horrible. It just doesn't. I'm really battling with this right now. Like it just don't. I don't like when the charts are messy. Guys, this is probably the reason why I don't annotate the charts in front of you guys. I annotate the charts and I upload it into my personal Discord. And for those who are VIP as well, so they get like the full menu, so to speak. They get starters, lunch, and dinner. The main course. Wash it down with good old soft drink. Well, I mean, wine if that's your preferred choice of drink, but I just don't like that. Fuck it, I'm deleting that. So we have 4.327. I'd like to see, sorry, 4.249. I'd like to see those highs taken out. If that being said, we've got the consequent encroachment of the buy side imbalance, sell side inefficiency, coupled with the sell side. You know what? No, what I'm gonna do. We have got a volume imbalance there, right? And a volume imbalance is regarded as a break in the matrix. So what I'm going to do, I'm going to use the daily in order to map out where the volume imbalance. I know, obviously, for those who don't understand market structure, you guys are not going to see exactly what I'm seeing like that. This buy side imbalance, sell side inefficiency, the reason why it is an imbalance is because buy stops that were previously here, for those looking to go short to take out these lows, was taken out and a gap was left behind. This wick came down and fulfilled 80 to 85% of this gap, and we ran to the upside. Now, those who still believe that it was going to go to the downside would place their stop there, got taken out there. All right. Now, those looking to go long could also place their stops there after this candle was formed. They got taken out of this candle. This candle created a shift in market structure. As you can see, the lows took out the previous swing low, and it left the gap, which is a civvy. We rallied back up into it this week, Tuesday. Stops taken into a previous. I'll be honest, where the fuck is this coming from? We ran into a volume imbalance, rejected Thursday. Barely zero manipulation to the downside, but we managed to rally, taking buy stops, closing clean above the highs of the previous day, which was the Wednesday. Thursday, Friday, we come in and we rally up to where we are currently at now, which is at 4.249. It's not even relative equal highs, it's literally a double top. So I do believe if we were to rally to the upside, we do have the 4.282 to 4.288 region, which is the next point of interest. The hourly I'm not going to really touch on, but I'll show it to you guys, just give you an idea of what the intraday time frame looks like. I'm not going to be explaining this, as this is sectioned off for VIP members only. That's a scalper. The hourly, 15-minute, 5, 4, 3, 2, and 1 minute time frames are the time frames that I use in order to execute my trades. I like to get in and out within a 10 to 15 minute time frame. I like to take a minimum of £250 out of the market and call it a day. And if I add or pyramid into my position, then I'm looking to have a very, very good time. Not only me as well, but all the other people in the community who's been taking the trades as well. So just to let you guys know, this is the yields. It's the US10Y market. I don't trade this market. I do use this as a barometer, so to speak, for all the other markets, especially ES, which we will get to very shortly. With that being said, I'm gonna wrap up. Yeah.